Welcome back, investors, to Ticker Time News. I'm Adam. Thank you for joining me for the After Hours show. I do apologize. I am much later than I would normally be, but boy, oh boy, do I have a story to tell you. So, as many of you know, I'm in a wheelchair. It's a motorized wheelchair, an all electric wheelchair. I kind of joke about that sometimes, but anyways, for me to get in and out of the house, I have to use a ramp because there's a step to get in and out of the house. So normally everything is fine, but a couple days ago, the suspension on my wheelchair broke in some way. I'm still not even sure how it broke. So it's extra wobbly moving front and back due to this suspension being broke, which, by the way, they are coming out tomorrow to fix that. So going in and out on the ramp is a little more dangerous because of this wobbleness in the chair. And anyways, going on the ramp, half of the chair fell off the ramp. Yeah. Oh boy, I had my daughter out there. She had a shovel trying to get under the front wheel to pry it up to get it back onto the ramp, and I just had to sit out there and wait until my wife got home, and she then helped to get the chair back on the ramp so I could get in the house to do this live stream for you. So that's why I'm late. It's a messed up story, but it is a story nonetheless. And yes, so thank you for being here with me today. A little excitement, a little joy because the market was so depressing today, right? I guess that's what this story of the wheelchair falling off, half of it falling off the ramp is supposed to do. Lighten up the mood, right? Okay. Well, the market today, when it started, I thought, well, here we go again. We're going to have one of these convictionless bounces where the market is going to go up. Maybe it ends in the green. But as soon as we got to the afternoon, everything fell apart, just like any other rally that we tend to kind of have in the mornings. They just evaporate and disappear. So the stock market, it fell for the third straight day as the buy the dip for beaten down growth stocks, it just totally evaporated late in trading today. And we have Netflix just falling, Peloton sinking on earnings and demand issues. So we're going to talk about Netflix and Peloton in today's show. Ah, boy, oh boy. In this market, it is good for investors to have a guide, some sort of a guide to show where should we be going? Where should we park our money for a little while? Or if we want to be active, what are some good companies to invest in right now? What are companies that have a good balance sheet, that have a good margin, that have a good cash flow, that are getting beaten down that we can start to invest in? And if we're trading, what are the stocks that have the biggest momentum, the highest relative strength that we can hopefully, get a good trade on? Well, not to keep beating the drum on this one, but we do have a 4 lists with value stocks, growth stocks, dividend stocks, and momentum stocks. And there are over 10 stocks on each list, but we call them our top 10 growth, value, dividend, and momentum stocks. And they're updated constantly. We just uploaded our momentum stock list today. So that's over 40 high quality stocks ready to choose from that are, like I said, constantly updated. So you always have the best names available. So click that first link in the description or the link in the live chat, become a member, and you get instant access to our top 10 value, growth, dividend, and momentum stocks, and so much more. We've done the research so you don't have to. That's my plug. Now, the stock market. It started today on a strong note in a very scripted way. We've seen this before. Then stocks closed lower after posting gains along the day, as there was a rebound in tech stocks, but that eased. The Dow Jones fell as much as 300 points after adding more than 450 points earlier. The S&P 500 dropped 1.1%, and the Nasdaq plunged 1.3% after booking gains of 2% earlier in the day. Those would be categorized as solid gains in a 2021 market. But here in 2022, that market, they are looked at nervously, since they are reminders that it is proving difficult to sustain any buy the dip momentum. The inclination to sell into strength, which is a good strategy to have. You don't want to sell when stocks are going down. You want to sell when stocks are going up to lock in those gains. Unless, of course, you're a long-term holder, and that's fine. You can have a portfolio that is broken up into, here's my long-term holds. These are the ones that I buy, I hold, and I'm keeping them for a decade, 2 decades, 3 decades, whatever the time frame may be. And then you have another portion of your portfolio that you trade on a regular basis. It's good. And that's why we are here on this channel, you and I both, in communicating in the chat and talking about the stocks that we love to invest in, the stocks we love to trade, and what's happening in the market. So the feeling of selling into strength, it's just not working right now because there are such sharp losses. It is not the characteristic of a bull market, that's for sure. That's not to say we are in a bear market, though, but it's a statement of fact that the bullish bias has been reined in a rising interest rate environment and fear, FUD, fear, uncertainty, and doubt over maybe a more aggressive Fed. It is also becoming reined in by the price action itself, which continues to leave many participants on the edge about the prospect of further corrective activity. To this end, the earlier news from CNBC that Peloton, ticker symbol PTON, we'll talk about this more in depth, but they're temporarily halting production of its bike and treadmill due to waning demand right now. And this serves to take some rebound momentum out of the market today, as that was another reminder of how carried away some growth stories got last year. Now, the hit Peloton took following the news, it underscores that bad fundamental news can, without a doubt, still leave a lot of momentum stocks at risk of further downside, even after they have already experienced, let's call it, material markdowns relative to more macro worries, more so than company-specific shortcomings, right? That could soon possibly be exposed as we move deeper into the Q4 earnings reporting season. Now, 10 of the 11 S&P 500 sectors, they closed lower after all started in the green. Consumer discretionary fared the worst, while utilities held out to be the only one with a gain. Meanwhile, Treasury yields, they did retreat for a second day from a recent 2-year high, and investors shifted their focus to corporate results. Earnings from Travelers and American Airlines, they both topped estimates, while United Airlines lowered its 2022 growth forecast due to the spread of the Omicron variant. Netflix and PPG Industries are down to their reports today after the closing bell, or they're due to report after the closing bell, and we've got Netflix to look at. Meanwhile, the initial claims were the highest in 3 months, while the Philly Fed manufacturing index that came in better than expected, sending mixed signals about economic recovery. And that's really what we have. We have some reports that say the economy is doing well. Others say it's not so well. And then we have the ones in between. And it's giving investors and traders these mixed signals. What should we do? Should we put a stop on trading for a while? Should we wait for this market to just fall out to whatever bottom it's going to? You know, yesterday when we were looking at the S&P 500, which is what you see in front of you, we talked about how yesterday the S&P 500 has fallen out of its trading channel. And it's only done that one time in the past nearly 2 years. And then this morning came around and the market was green and things were going up. And I was like, well, what I said in a live stream yesterday, cut that out, because the market's obviously turning around. But no, we've fallen further. We are getting the S&P 500, that is getting awfully close to that 200-day moving average. And like I said yesterday, when we measured yesterday, the top right here, the record high, down to where we were yesterday, right? We were only down about 5.7, 5.8%. That's not a correction. You got to be 10% or more to be considered correction territory. So then we measure down to the 200-day moving average, and that puts us at about an 8% loss. So I said, if we go 10%, look at this, 10% will put us right here, just below that 200-day moving average. That's where I could see us heading. And this morning, I thought, man, why did I say that yesterday during the live stream? Because we're obviously rebounding. Well, now I'm glad I said it. I'm glad it's out there, open for anyone to watch. Because I think we're going below the 200-day moving average on the S&P 500. Now, the NASDAQ, it's already under that 200-day moving average. It's already in correction territory. And I was thinking yesterday that maybe the NASDAQ was ahead of the S&P 500, and maybe it'll rebound first, and the S&P 500, maybe that's coming in to follow the NASDAQ, and maybe, or maybe, as another theory, is that the NASDAQ over the past 2 years, those growth stories got carried away, and we got really good gains. So maybe the NASDAQ is falling harder and faster than the S&P 500 because those growth companies, those tech companies, their stories got blown up way, 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 way more than the companies in the S&P 500. Possibility. Okay, let's look at Bitcoin for just a moment here. Ticker symbol BTCUSD on TradingView, and there is a link in the description for a free account to TradingView. Now, Bitcoin today, it has fallen, and yesterday, let me get rid of the volume. The volume right now is about average, so oh, hold on. Got to get rid of that. There we go. Volume right now is about average 16.1 million today, with average being at 15 million, so just slightly above. But yesterday, let's zoom in here. This is the daily chart, like every day. Yesterday, it closed below this ascending trend line. Today, it has fallen further below that trend line. And right now, it's getting really close to this 40,000. As I was talking, it was at 41,006, 7. Now it's 40,971, and it's falling down even more. So I think this is going to a 39,000, 40,000 level, and I'm starting to turn a little bearish in the short term for Bitcoin. But Bitcoin, it continues to trade in a very tight range. And we've been talking about this now since January the 7th, about this range that it's in. Now, before that, going back to December the 9th, it was in a range. And I think I should do the same thing here. Let me put this box. Oh, I don't want to move the whole chart. I just want the box. There we go. There's the box. What is going on here? There we go. I want to put this box down here. I want to put it right on that 40,000. I want to get right down. Okay, so the bottom of this box, I can get rid of this purple line now. The bottom of this box is down on the $40,000 level. And the top of this box is sitting at 42,300. I'm going to take it up to 42,500. Okay, there we go. All right, so it's sitting right on that $40,000 line in Bitcoin. Now, with Bitcoin continuing to trade, and we can see it, it is in a tight range right here. Given both bulls and bears plenty of time to build their case, right? For the bulls, its fundamentals are still strong in terms of users and network activity. Also, Bitcoin and the broader crypto ecosystem are being supported by the emergence of new spaces and markets like the metaverse and, of course, NFTs. Now, for the bears, they can point to the relation between M1 and Bitcoin price as a bearish indicator. The Fed's tightening spells trouble for Bitcoin. On the other hand, we are approximating the point in Bitcoin's 4-year cycle where the bear market or crypto winter begins. Ultimately, I am still bullish on Bitcoin long term, though I would expect short term or even medium term weakness. Still, no one knows the future with any certainty at all. And I would say keep a long position on Bitcoin. As Bitcoin and its price falls, add a little bit. Add a little bit, you get your paycheck, add a little bit. Add a percent or two of your paycheck. Add a little bit every month. Every other week. That's what I'm doing right now. Every month, a little bit more. And I take that chunk, that monthly chunk, and I'll divide it up. Because I don't want to put it all in, say at 40,988, where it is right now. It may fall to 40,000 even. I'd rather buy a little bit right there. Since I'm dollar cost averaging a long position on Bitcoin, you have the luxury of waiting, of being patient. And for long-term investors, patience is obviously one of the key tenets. So just be patient, dollar cost average into Bitcoin as it's going down. That's what I suggest. Now, Ethereum, Bitcoin is down 1.85%. Ethereum ETH USD and Ethereum is down 1.5% today. It's actually holding up on par with Bitcoin. And usually Ethereum has been taking bigger moves than Bitcoin. Now, I've been saying for a while, Ethereum is not down to its bottom trend line like Bitcoin is right now. And I've been saying it since the end of the year and the beginning of January. Ethereum does have another trend line that it could fall to. And if we look at yesterday and today, it's broken its current trend line and it's coming on down to this next trend line. That's where I see Ethereum going. And that trend line, if I extend it out, and I really should have done this. I need to lock it in place and extend it out. This is the trend line that we want to watch for the bottom, okay? Right there. So if we take and extend it out a couple days, where does that put us for Ethereum touching that trend line? If we go just a couple days, let's go to the 24th. Then that's about 28.35 for Ethereum, and it's at 30.35 right now. So I think Ethereum, in the short term, it could get that low, especially with yesterday we talked an awful lot about risk on and risk off in the market. And right now it's risk off. So the riskier the asset, the more it gets beat down. Okay. Just look, and we'll look at SoFi in just a moment. That's one that had tremendous fundamental change to the company for the better. And we'll look at how that stock has been faring. It's gotten some pretty high gains, but it's also given a lot of those gains back because of the macro environment. All right, let's look at Cardano. I'm adding it to our daily list to look at because it's been performing pretty good for the year so far, and that's ADA USD on TradingView to look at that. Now, this recent rally that it's been in over the past 3 days, it has given the highs back. Okay. Yesterday, Cardano was in the positive year to date. Today, being down 5.9% right now, it is down 3.7% year to date. It is now in the red for the year. And yesterday, it was in the green. So it recently had this rally that started right here on January 10th. It hit this bottom, this low of $1.07. And then it rallied to a high of $1.64 before ultimately falling down to where it is now at $1.25. So this can come on down, most definitely. It seems to be trying to build a base somewhere, I don't know, somewhere down around, I guess 115 is the bottom. And it's trying to build a base around 115, maybe up to 120. So $1.15 to $1.20. It looks like a base is trying to form there for Cardano. And if you look, I mean, this was a very high runner back in August, September timeframe when Bitcoin was running and hitting its all-time high, but then it fell. So this is what I'm watching closely. As far as crypto go, this is the number 3 holding: Bitcoin, Ethereum, and then Cardano. And fourth is Solana. All right, I want to check in on Enphase. This is a company that, as a company, I believe it's solid. It's a really good company, good management, good foundation, and it's got good numbers. But it's a growth company, so it is getting beat up. ENPH is the ticker symbol for Enphase. It just can't catch a footing right now. But the reason I want to bring Enphase up is it was up, or I should say it was flat for the day, right? 0.08% flat. Now, in after hours, it's down 1.1%, but it is trying to build this base around 135 being the top and then 130 being the bottom. Now, relative strength, as you can see down here, it's been waning. It's been falling, going all the way back to November, right before it hit its high. So this is one that, as a growth company, it's one that I like to add on to a little at a time, right? Dollar cost average. One of our best tools as investors in this environment is dollar cost averaging, where these companies that are getting beat down really hard, that are good, solid companies, that in 5 years from now, 10 years from now, when the market mechanics have changed and we're risk on, are companies that are going to do really, really well. So as long-term investors, dollar cost averaging is your best friend. But Enphase, it right now in its category, it is the best performer. Yeah, being flat for the day is the best performer. It is bouncing off of the lowest levels that we've seen since early June. So just stack on to, even if you're buying fractional shares, build up, have a goal to build up to a full share. If you're buying multiple shares, buy 3 or 4 instead of buying 10. Dollar cost average on the way down. That lowers your cost basis, and when the stock then does rally as market conditions start to turn, then you're getting a better profit. But the company has said that the demand for its products has been steadily growing. And one particular area that they pointed out was Washington State. Demand in Washington State has been off the charts growing for Enphase. So that's an interesting area, because you think Washington State, you think rain and clouds, and where's the sunlight, right? So whatever power they can absorb, they've got to store it, they've got to convert it. There's Enphase. All right, I mentioned SoFi. I should have just jumped over there when I mentioned them. SoFi Technologies, the big announcement is the fact that they were approved to become a national bank. Really big news. Now, on that news, SoFi had fallen to a low of $12.02. It was about to break down to $11 a share. This thing was over $20, $24 not that long ago. And it's fallen all the way down I'm guilty of believing, oh yeah, this is a good entry point. Oh no, this is a good entry point. You watching, you're probably thinking, what, this dude is off his rockers. He keeps saying these are good entry points, but the stock keeps falling. Well, what happened as you bought on the way down? Your cost basis gets lower. Your dollar cost averaging, and as a long-term investor into companies that you love, that your investment thesis says, yep, this company is going to rock. This is going to be a company that changes the way things are done, and it's going to be a really good company in the future, right? Dollar cost average, hold for a decade. It's better to lower that cost basis than to just say, well, I bought at $20 and it's now at 15. I'm in the red. Let me panic sell so I stop the bleeding. No, 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 no. If you think it's a bad company or you were only in it for the trade, sure, cut your losses and get out. But if you're a long-term investor and you've built up an investment thesis on this company and you believe in this company, then dollar cost averaging, whether you bought at 24, then at 21, then at 20, then at 18, then at 17, then at 15, then at 12, you're lowering your cost basis. And that is the smartest thing you can do as a long-term investor in SoFi. Now, when the news came out, this thing popped all the way to its 50-day moving average with a high of $16.47. But that 50-day moving average was a wall. It stopped the rally. And then all afternoon, it slowly bled out. Slowly, 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 right? Because people, a lot of people, got into SoFi just for the trade. That's okay. That's why this thing rallied 20% plus. You want me to measure it? Show you exactly? Let's get down here to the bottom. And let's go up to the 50-day where it got stopped right there. That was a 36% rally in 2 days. 2 days, 36%, 36.5%. If you were in it for the trade, there you go. But if you're in it for the long term, then you probably didn't buy much as it was going up. At least I hope not. Because you shouldn't be chasing stocks as they're going up unless you have a very precise trading strategy where you are trading momentum. Then it's okay because you have a plan. You have a entry point and you've got an exit point, right? For long-term holders, we just watched as, oh yeah, we're profitable now. Yep, look at that. Oh boy, oh wait, hold on. Oh, there goes those profits. They'll come back someday, right? Yes, they will. They will. This is a solid company, and this becoming a national bank is huge for SoFi. Now, I hear people say, because I had this post over here on TradingView, where I do make posts over here on TradingView. This SoFi post here, let me refresh it so it's accurate. All right. So the stock chart is loading. Take that off. So it's all right. So the stock chart is there, right? Now, when I push play, Watch what happens over here on the bottom right-hand side of this stock chart. Boom. There's your 30+% gain right there. But anyways, I posted this over there. 272 likes so far, 28 comments on it. And it's just a brief post that talks about SoFi becoming a national bank and what that means, and just a breakdown here of it. And then, of course, we get your old comments here. TradingView, the platform itself, is a great write up, and donated 100 coins to us. So that was really cool. And a bunch of comments. But there was one on here that I got to look at, and I got to show you guys. And I think it's this one. It's from Hot Charts. And I think that is this the anyways, the comment was, we have too many banks now. The big banks will crush this company upside down and backwards. There's, quote, nothing unique about what SoFi does or receives approval for. Brokerage firms are considered banks. The only thing the news did was temporarily reverse the downtrend. Use the spike to sell your position. So that got me thinking, okay, is SoFi nothing? Is there nothing unique about SoFi? Well, look at the legacy banks. Look at JP Morgan Chase, even Wells Fargo. And you look at those big banks, right? What's unique about SoFi that the big banks don't have? Well, SoFi is really a mobile first bank. Now, not the first bank to have a mobile app or anything. What I mean by that is SoFi is building for mobile. It's, to me, easier to use SoFi on their app than it is desktop. So SoFi building for mobile is building for the future. Excuse me. The legacy banks, they will make a app for their bank so you can pay bills, deposit things, but who makes it easier to invest in an ETF? SoFi or JP Morgan Chase? SoFi. Okay. Now, then I might get a comment that, okay, so what? It's easier to buy an ETF on SoFi than going through JP Morgan Chase, but it's only retail investors who are buying the ETF on SoFi, and it's the big money going to JP Morgan Chase. Okay, you've got a point. You've got a point. The big money isn't going to be on SoFi. It's probably going to be over and done with a phone call with JP Morgan Chase. I see your point, but I'll raise you one. With SoFi building a base of customers, in a decade from now, those customers are going to be with SoFi, and they're going to have their stocks with SoFi. They're going to have their crypto with SoFi. They're going to have their mortgage with SoFi, their car loan with SoFi. They are going to be in SoFi's ecosystem, which means it makes it more difficult for that customer who started out buying a $5 in an ETF over 10, 20 years. They're going to be so locked into SoFi that it's going to be not impossible, but it's going to be difficult to get away from SoFi to go to maybe a major bank like JP Morgan Chase. So that's a bonus. SoFi is building for the future. And as JP Morgan's larger donors, wrong word, oops. With JP Morgan Chase and their older clientele, they're not getting younger people. SoFi is getting the younger crowd, right? The millennial generation. Gen Z, maybe they're caught in the middle. Half and half, right? But in the future, 10, 15, 20 years from now, SoFi will have so many locked in to their huge vertical of different stocks, right? Loans, all kinds of different things will be locked in over on SoFi. So when I see that SoFi's got nothing unique, they're building a mobile first application and they are connecting with the millennial generation who over time is going to be one of the wealthiest generations in history. Now, I saw on, now I can't, there was a YouTuber I was watching, I can't remember the YouTuber's name, but they were telling a story about generational wealth transfer and how millennials are going to end up with one of the ending up to being one of the wealthiest groups that their generations that there ever was. So it's quite interesting. And then when you think that, well, SoFi has got them integrated into so many different products and services that they're not going to be able to just jump ship, decades from now, that it really got me thinking about SoFi. NVIDIA looking good here with a question mark. Let's look at NVIDIA on the stock chart here. We'll pull them up and look. NVDA is the ticker symbol for NVIDIA. And let's take a look here at the stock chart. Now, the more this thing falls, the better. Now, here's what I was talking about. See this purple circle here? Once it reached this level, it had two ways to go, up or down. And NVIDIA went down. Overall market drug it there. So let me get rid of this. I thought I clicked on it. There we go. Okay, so here's NVIDIA. I think NVIDIA is coming down to 230, 225. I think it's coming lower because when we look at this rally that it had, this rally right here has no support as it got higher. Not until it pulled back right here. Then there was a little bit of support built in. And then you can see that also happened right here when it was on its way down. It did stop right here and have a little bit of support. But the 50-day moving average was also there too. And that's a big, big support resistance area depending on which side of the line you're on. So with no support all the way up, that's why I believe it's coming all the way down. And I think we could get maybe under 200. I think we might be able to get under 200. So I'm going to put a line right here at 200. What did I do? I put a stock alert there. I didn't mean to do that. All right, so now I've got a stock alert set up at $200 for NVIDIA. And why do I think it's coming that low? Well, if we look here at NVIDIA, I want you to really look at the middle of the screen here between the beginning of July 21 all the way until October, the beginning of October 21. Right here, the beginning of July, for several days, $200 acted as support, right? So NVIDIA's in this rally, they hit $200, they stall for one day, and then they break through. And then then $200 is support. Then it falls. It catches the 50-day moving average, keeps it moving up. It then stalls there again, and 200 is resistance. It breaks through. And we see this play out another time. And we see it play out again. This time for an extended period of time, it was acting as resistance there. So this $200 line right here, I think, is important. I think it's really important. And I think there is support built in along this line at $200. Now, the 200-day moving average is going to act as a speed bump. And right now, the 200-day moving average is about 8% from where NVIDIA is right now. The $200 area, well, that's another 16% from where NVIDIA is right now. So anywhere between 8 to 16%, I think NVIDIA could fall into. So I'm really watching that $200. NVIDIA hits $200, I am definitely jumping in on that one. NVIDIA breaks below the 200-day moving average, I'm definitely buying NVIDIA. One more measurement I want to make. I want to go from the all-time high right here, $346, and I want to drop down to where NVIDIA's at right now. It's 236 right now. Almost to it. There we go. So right now, that's a 31% discount on NVIDIA. And for most shoppers, when something is on sale for a third off of its price, that's a really good deal. 30% off of the price of something is an excellent deal. And I know everyone watching, if you went to the store, there was something you were going to buy and it's 30% off, you're going for it. Now, let's take another measurement. Let's measure from this all-time high, 346, but let's measure down to the 200-day moving average. Okay? That's a 36%. Let's measure to $200. Almost there. Almost there. Oh, right there. When we get to $200 on NVIDIA, that's a 42% pullback. 42% pullback. I'm buying. That would be a great deal for NVIDIA because NVIDIA has got a lot of tailwinds in 2022. Whole bunch of tailwinds. So I just see right now in this market, there were a lot of excellent growth stories in 2020, in 2021, and they just blew up. They just ran to the sky. And right now, every one of those companies is getting rebalanced right now. Think of it as a ETF, right? And they've got a basket of stocks, and it's the end of the month or the middle, beginning, whenever it is that they do it. And they have to do their rebalancing. Heck, even think of the S&P 500 and how once a year they rebalance what 500 companies are in the mix. Some get taken out and some get added. They have to rebalance that scale. Well, right now in the market, for all of those companies that had spectacular growth stories, they're getting rebalanced right now. They're bringing the valuation down, rebalancing them, putting them on sale without changing the fundamentals of the company. Really, not changing the growth story either. So that makes this an even better time to be investing. Dollar cost average, because you don't know when the bottom's going to hit. So that's my thoughts on NVIDIA right now. I think it's going to that 200-day moving average, which right now the 200-day moving average is sitting at $220. I definitely think it's going there. Then anything else below that, to me, is a bonus. Because NVIDIA, this is a company that I'm buying and holding for the long term. Not just to trade it or to have it for a month or two. No. This is a company that, with all the talk of the metaverse, if the metaverse plays out like Zuckerberg is dreaming it to be, who is selling the miners the pickaxes? NVIDIA is. Think of the gold rush in the West, in California, and in the Rocky Mountains. There were many prospectors who came up empty-handed. But there was always one person who won. And it was the guy selling, or the gal selling, the pickaxes to the prospectors. They are the ones that really won that game. NVIDIA is selling the pickaxes to the prospectors headed to the metaverse. You've got to have the GPU. That's NVIDIA. If you want to build the metaverse, if you want to have your piece of the metaverse, you've got to have the hardware to support it, and that's NVIDIA. That's why I correlate that story of the prospectors, the miners, and the people who were selling the pickaxes to NVIDIA and the metaverse. So again, down to that $200-day moving average, which is $220. Below that to $200. That's the area. That's the sweet spot. Okay. So if you want to get in on NVIDIA, dollar cost average, how's it going, Mario? Hope you're doing well. We're here for sure. So NVIDIA, $220 to $200. That's the sweet spot. That's the entry point for NVIDIA. And just remember, it's a rebalancing happening right now with a lot of the growth companies. All those growth stories that we had over the past 2 years, they're getting reset, rebalanced. The evaluations are coming down, and that's creating entry points for long-term holders. Okay, let's keep moving along. So that was NVIDIA. We talked about SoFi. We talked about Bitcoin. Let's see. We talked about the market. How about we talk about, oh, yep, we need to talk about Netflix, right? Netflix sunk, just absolutely sunk. And why did Netflix sink? Because Wall Street was looking at a simple metrics on Netflix. Ticker symbol NFLX for Netflix. Let that load there. You can see the fall. Look at that. Oh my goodness. Oh my goodness. Wow. You got to look at this and just wow. Be amazed. It's not even on the chart. It's not even on the chart. I'm going to have to adjust my chart just to see how hard Netflix fell. All right, so hang with me here for a moment. Let me fix this. I've got to take this chart like this. Look at that. Look at that. That is incredible. Okay, so Netflix. Let's put some lines in circles and let's draw all over this thing. Netflix was, when it closed today, when Netflix closed today, it was right here. Okay? It was right here when Netflix closed. Netflix right now is down here. You see that big gap down? Netflix lost 20% today. Netflix lost over $100 a share. All because of what? One metric? Oh my goodness. 20% gone from Netflix. Okay, so let's talk about Netflix here. Obviously, Netflix stock has fallen really hard, and this comes after they reported earnings today. Now, their Q4 earnings per share came in at $1.33. That did beat by 50 cents. And they had revenue of $7.71 billion. That was a 16.1% year-over-year gain, and that came in line. Operating income for Netflix was what was it? It was $6.2 billion. That was a 35% year-over-year gain. For 2022, the company is currently targeting an operating margin of 19 to 20%. Free cash flow is expected to be positive for the full year of 2022 and beyond. It's not positive right now. Its stock has tumbled after hours 20%, all because of its fourth quarter earnings. And it's not so much the EPS and revenue, but its revenue was in line, like I said, with expectations. Here it is. Subscriber additions fell short. And they fell short both on Wall Street expectations and Netflix own guidance. The company added 8.28 million net subscribers worldwide. That was below its own expectation for 8.5 million. And of course, the street, its assumptions of 8.32 million. Those additions brought the company to 221.84 million global paid memberships. And that was an 8.9% year-over-year growth. In Q3, additions came in a little bit higher at 9.4% year-over-year growth. Revenues also grew in line 16% to land at 7.71 billion. Like we said, in operating income, it fell to 34% to end up at 631.8 million, beating an expected 559 million. And operating margin was slim at 8.2% versus last quarter's 23.5%. And a year ago, 14.4%. For the upcoming first quarter, it's forecasting just 2.5 million net subscriber additions to come in at 224.34 million total. And that would represent an 8% year-over-year global growth. So Netflix is down 19% because they didn't add enough new subscribers. And quite frankly, with the pandemic coming up behind us right now, we're starting to move past. Look at what's happening in England right now. In England, they are dropping all mandates. You don't have to wear a mask anymore. You don't have to be vaccinated. They're dropping everything. And they're getting back to life and freedom 100%. So, with that happening in England today, and Netflix coming in short on new subscribers, Netflix is now facing big headwinds. I haven't dug into the details all the way yet on Netflix, but it's that one metric. And again, it wouldn't surprise me if Netflix stopped sharing that metric, because that one metric is what sank Netflix 20% today. And with the global economy slowly but surely reopening, I know we've got mixed signals on that, but with it slowly reopening, people getting out more, doing more things out and about, they're spending less time at home, less time watching Netflix. That means instead of net additions, that metric in the next few quarters, it's possible that it becomes instead of net addition, net loss of subscribers for Netflix, which is why they may just stop sharing that metric altogether. I still think that it's a possibility, because as you can see, that hurt Netflix 20% in the pocketbook in their stock today. Okay, so that's Netflix. Let's go look at another loser today. I just got to talk about it. Now, with this one of the biggest, let's call it a pair trade, right, of the pandemic, it's back in full swing today, with the at-home fitness stocks moving in a totally different direction than gym stocks. Peloton Interactive, ticker symbol is PTON, PTON. Peloton, it fell today Oh my goodness. And there are people buying the dip on Peloton right now. Peloton fell 24% today. And it's up 2.3% in after hours. So obviously, somebody is thinking that this was overdone. This 24% drop today was overdone because it's up 2.39% in after hours. So people were buying the dip on Peloton. Now, even with Peloton's fall today, it didn't cross the line into oversold territory. It's at a 32, and it's 30 or below is oversold. Okay, so Peloton, here's why it fell by so much. Peloton dropped sharp after it was reported that the company had made the decision to temporarily halt production in connected fitness products due to slowing demand. There was a Peloton memo that was seen by CNBC, and it pointed to a significant reduction in global demand, due mainly to shoppers' price sensitivity and increased competitor activity. That was in the memo. A production halt of about 2 months appears to be what the plan is. Now, there has been chatter for a few weeks that the company was likely to cut back on supply in the near term in order to control costs. Shares of Peloton hit a 52-week low today of $23.25. Exponential Fitness, ticker symbol XPOF, they were up today. F45 Training, FXLV, they were up today. And one of my favorites, Planet Fitness, PLNT, they were all up today, and they were all benefiting from the drop in Peloton. Usually, when Peloton is doing good, those stocks are doing bad. And when they are doing good, like Planet Fitness, when it is doing good, Peloton is doing bad. They have been linked like that since the beginning of the pandemic. So Peloton demand has dropped. Why? Like I said about Netflix, look at what's happening in London. People are slowly but surely getting back to a normal routine of being out about, getting out of the house. So when you're looking for good stocks, good companies to invest in, this is a theme that I think will play out throughout 2022. And that is, if a company makes something today that they can sell today and make a profit today, they will be rewarded today. NVIDIA is one of those companies. They sell something that is in need all across the world, but they can sell it today, they can make a profit today, they can be rewarded today, they can reinvest that money today. That is a 2022 theme. Those are the companies to look at. Also, companies that have got a solid balance sheet that are reinvesting that money. Microsoft and its deal, and we did a deep dive yesterday on Microsoft. But Microsoft, it can't sit on all this cash. Not with high inflation and interest rates going up. Now is the time for those companies to get off of that cash and start spending that cash and start consolidating in markets. You watch it, it's going to happen. More big companies are going to buy smaller companies, or medium companies are going to merge with other medium companies. There's going to be a consolidation happening over the next several months. We're going to see it play out because these bigger companies with loads of cash cannot sit on that cash. They've got to spend it now. Otherwise, that cash becomes worth less. All right. So that's a little bit there on Peloton. All right. Backed by a red hot aluminum market that has seen prices of the commodity shoot higher by 50% year over year, Alcoa, ticker symbol AA, Alcoa Corporation, posted one of its strongest earnings reports in recent history last night. Read through this thing, pretty amazing. With the stock having rallied by 35% since early December, an impressive showing was definitely needed to meet the sky high expectations. The company met that challenge, totally met that challenge, reporting quarterly results for adjusted net income and adjusted earnings before taxes, with revenue jumping by 38% year over year. Alcoa's highest growth rate in over 5 years. The good news doesn't end there. Based on Alcoa's strong upside guidance, which calls for Q1 22 adjusted net income to roughly match Q4 21 levels. So it's clear that the company expects the robust market conditions to persist. Inflationary pressures, especially surrounding energy and raw materials, are expected to continue into fiscal year 22. But Alcoa, they believe that high metal prices will largely offset those headwinds, furthering Alcoa's recent actions to shore up its production portfolio through plant shutdowns and facility divestitures. They have better positioned to weather the rising cost. Now, the company and the macroeconomic catalysts that fueled Alcoa's quarterly performance since implementing a multi-year review of its operating assets in October of 2019, Alcoa has achieved about 75% of its 1.5 million metric ton goal in its smelting portfolio assessment. Resulting actions include the closing of Alcoa's facility in workers in Washington, and I think it was a 2-year closure for a second aluminum smelter in Spain. The closures, or maybe closures isn't the right word, idling of less efficient plants, it's generated over $1 billion in capital over the past few years, enabling Alcoa to pay down debt, reinstate its dividend, and authorize a $500 million share repurchase program. Global demand for aluminum products is quite healthy, driven by strong construction and housing markets, rising new vehicle production, especially for electric vehicles, and government sponsored infrastructure projects. On the supply side, aluminum inventories have crept higher lately, but they remain at historically low levels. China plays a major role in the more limited supply because it has cut back production to reduce carbon emissions. The main takeaway from the report is that the same bullish dynamics that drove Alcola's resurgence early in 2021 bolstered its results in Q4, leading to a blowout on the bottom line, buoyed though by a favorable supply and demand environment. The outlook is bright for Alcoa, although geopolitically and monetary policy risks are threatening in the background. So that's my thoughts there on Alcoa. Great earnings report. The stock was up 2.7% today. Uh, you know, not a big move, but when you're looking at an aluminum company like this, they don't typically have really big moves. You got to go back to their last earnings back here where they moved 15%. Actually, a little bit more than 15% on those earnings. But that was incredible. And as you can see, this rally, this run up into earnings, this was all in anticipation of a blowout earnings report. All right, let's talk about catalysts for Friday, January 20th. Now, I have two, and they both post earnings tomorrow. First up is Ally Financial, ticker symbol ALLY. Now, Ally Financial has dropped in recent days. They're no longer in my squiggly line chart pattern that I drew a while ago, back in the middle of December. But they did bounce off of their 50-day moving average, which is a positive. So today they got as low as 48.71. They closed at 48.98. 48.98. Now, when it was dipping today, I did buy more shares of Ally Financial because I think that this pullback over the past 2 days for Ally Financial has to do with the big banks missing on growth, with growth slowing down, especially in fixed trading. That came out wrong. Fixed income trading. Yeah, it's all rigged, right? Okay. Yeah, that totally came out wrong. Fixed income trading, that has dropped way, way down. For Jeffries, that was 49% decline. So I think the pullback in Ally Financial over the past few days, people are thinking, oh, hold on, we're going to have a bad earnings report, exit, jump out of the vehicle. But I think that's presenting an opportunity. Now, if we go back and look at their last earnings report, we have a significant sell-off. This thing was as high as $56, 56.28. And earnings came out, and for 1, 2, 3, 4 days, big red candles. And there was one small green candle in the mix in the middle. but a really big sell-off. And basically, if we look at where this ended up down here, that's right here where this bottom is on my squiggly line. This was the bottom. So it's really just moved sideways for several months in a recent rally here, but now that rally is pulled back, anticipating a bad earnings report tomorrow. That's what they're anticipating. And that's why the stock is pulled back. Now, today it was relatively flat, down 0.02%. So this is what I'm watching for tomorrow. Now, the next one that I'm watching for tomorrow is Honeywell, ticker symbol HON. They build a lot of stuff. You see Honeywell, their stamp on a lot. Right now, it's under its 200-day moving average. It's under its 50-day. It's under its 21-day moving average. It's just looking really, really bearish. Here, I need to fix the chart. It's been in a downtrend here since July because inflation and the cost of raw materials, got to get it lined up right. There we go. The cost of raw materials has been rising. So we almost have a channel here, but I don't think this is a clone. I think this bottom line is different. Not by much though. Look at that. Not by much. This bottom line is expanding out just a little bit to clone it. So as it's coming down in this channel, its bottoms and tops are getting a little shorter here. So it's starting to squeeze. But it looks like maybe 1, 2, 3, 4, no. 1, 2, 3, 4, no. Okay. All right. So this is what I'm watching for earnings tomorrow. They build a lot of stuff. Right now, it's not oversold. It's at a 48, so it's nowhere near being oversold. It's just over 200. It was down 0.8%. It's a slow mover. It doesn't move fast. But I'm watching Honeywell for what are the costs? What are the input costs? What are the raw materials costing? Is that going up, down? Is it stabilizing? That's what I really want to see. Are those costs stabilizing, those input costs? All right. So those are two I'm watching tomorrow. I'm excited about Ally Financial. I think it could surprise to the upside. Honeywell, I think it'll come in just fine, but it's a slow mover. So yeah, definitely watching Honeywell for tomorrow. And that's it. That's the only two that I'm watching for tomorrow. So I'm going to go ahead and wrap up the video here now. So just remember three things. Three things. One, click the like button. That lets YouTube know you think this video was helpful, informative, actionable. And then second, take the URL and share it wherever you can. That lets other people know that you thought this video was helpful, informative, actionable, and that will help all of us reach the goal of financial freedom. And then the third thing to do is click the first link in the description. You can help out our research, our analysis, our technical breakdowns, and get our top 10 value. dividend, growth, and momentum stocks list. It is very helpful to have those lists with you so you know what categories have the best stocks available. And we constantly update them. We just updated the momentum stocks list today, and there was a rotation in the names today. A lot of names got taken off, new names were put on that momentum list because the market is changing. And the market is constantly changing. So make sure to click the first link in the description to check that out. It is a really big help for investors. All right, ladies and gentlemen, remember, if it's a good story, has a good chart pattern, then it's a good investment. And don't forget, dollar cost average your way down as we continue to fall. Well, that'll do it for this episode. I want to thank you so very much for joining me and being here, and I'll see you guys in the next video. Thank you.